Hello everyone, welcome to Series 4 of the GBA Lightbulb Sessions. The Great British Entrepreneur Awards, in association with BT Skills for Tomorrow, have designed a free live stream series of Lightbulb Sessions to support small businesses and entrepreneurs with insightful and advice-driven sessions, featuring some of the UK's brilliant entrepreneurial minds to illuminate your path to entrepreneurial success. You can find out more about BT Skills for Tomorrow by heading to their website at www.bt.com/skills for tomorrow or by clicking on the link in the comment section. In today's session, Great British Entrepreneur Awards Head of Content Jonathan Davis will be speaking with Jes Bailey of Crowdfunding 360 and Laurence Campbell-Cook of PaveGen to find out how to create the perfect crowdfunding campaign for your business. Jes and Laurence will explore the world of crowdfunding and its rise over the past decade. They will identify the main reasons why entrepreneurs and businesses embark on crowdfunding campaigns, what a campaign must have, and what it shouldn't, and what it should avoid. There is an opportunity to ask questions during this session. If you have a question you'd like to ask, you can pop this in the Q&A function at the bottom of your screen, and we'll do our best to answer these towards the end of the session. Please note there will be a poll at the end of the session and all answers will be anonymous. And with that, I'll pass over to our host today, Jonathan Davis.
Yeah, thank you, Chloe, and thank you, Jes and Laurence, for taking the time to join us today. I guess it'd be a good place to start by finding out a little bit more about you guys, for anyone who doesn't know. So, Jes, can I come? No, I can't. That's a good start. Can I come to you first, please?
Yeah, sure. Thanks for having me. So my name's Jes. I'm a crowdfunding consultant. I work independently of the platforms. And over the last 4.5 years, we've run 72 campaigns with an 83% success rate. So we really take organizations through the whole journey of the crowdfunding, right from the beginning of the prep all the way through the campaign and after it as well, on whatever platform is best for them to just make sure that they have the highest chance of succeeding.
Excellent. And Laurence, please.
Hi guys, great to be here this morning. So my name is Laurence and I'm the founder and CEO of PaveGen, and we make floors that convert the weight of your footsteps into electricity. So as you walk, it generates power. I founded the business in my bedroom after studying engineering at Loughborough University, and we've scaled the technology now so you can see it outside the White House, where we power the lights as people walking during the day. It powers the lights at nighttime. Also running tracks in buildings in Hong Kong. If you look up to the 4th story of an office block in the heart of Hong Kong, there's this running track around the building that uses the energy of people running to power the building itself. So we've had tremendous growth since our company's inception. We're a team of 40. We operate in 30 countries, and our clients are the likes of Siemens, BASF, Canary Wharf Group, large developers, and also brands. And I guess why am I here today? We're here today because we've done free crowdfunding campaigns. We've delivered in excess of 6 million raised, and cumulative revenue is around £11 million of the business today. So we're London-based, and we're certainly crowdfunding converts, so to speak.
Excellent, thank you, and I'll apologise in advance for my dog scratching at the door and barking the joys of working from home. But yeah, thank you for that introduction to yourselves. Particularly great to see your kind of area of expertise in within crowdfunding, Jes, and Laurence, obviously your experience having gone through campaigns. Jes, I want to come to you first. Crowdfunding is still a relatively new concept within the kind of broader world of funding. So I guess it'd be a good idea to first of all get an overview of crowdfunding for anyone here who isn't kind of aware of it already. But then further, kind of why has it become so popular over the past decade or so?
Yeah, sure. So the definition of crowdfunding is to raise a particular amount of money for a specific project from as many people as possible in a particular time frame. So it's really like that every little helps attitude, but the time frame is so important because we all have that friend that's like, I'll give you money next week, I'll give you money next week, and like next week never happens. So having it in that time frame is really important. It's not a new concept at all. Like the base of the Statue of Liberty was crowdfunded back in 1885. Just with the rise of online platforms making it easier for people to reach people all over the world, it has obviously grown in popularity. Other reasons why it's grown in popularity, while banks are way more stingy on giving out their loans. Investors are, looking for
I think we might have lost Jess there. Yeah, it's always that conundrum whether it's just my internet or someone else's.
I'm getting it too, so I think it's her internet is cut out.
Right. Okay. So while we wait for Jess to sort that internet connection out, Laurence, I'll come to you and we'll carry on the best we can. Obviously, you mentioned that you've gone through 3 campaigns, obviously raised a heck of a lot of money. What attracted you to crowdfunding over other funding sources?
So I think when you look at building a business, how do you raise money? You've got friends and family, which is your seed capital. You've got high net worth individuals, family offices, venture capital, private equity, as some of the traditional ways of raising finance. Now, we did our seed round and we had a number of high net worth investors early on in the business. And then we thought, well, we had some term sheets from venture capital funds. And we thought, well, we could take this term sheet here, and they have different terms in it. And there's things called liquidation preferences that always mean the VC wins at some point. And we thought, well, what about if we just got rid of all those terms and got much better deal for our investors? And we went to crowdfunding. So the benefits of this is we have a large pot of investors with no single investor with too much control, because venture capitalists are out for themselves. All they're there to do is give a return to their investors. And they'll say they help founders, which of course some do, but at the end of the day, they have to give returns to their LPs, so they reinvest in their funds. So actually, if you get a lot of wide pot, they can't control you and say, you have to sell tomorrow. You must sell because we want some return. So the benefit for us is we got much better terms. We could utilize this huge base of support that we had out there from not only our customers, but I guess the social media supporters, people that really support our brand. And so we've got that kind of preference. You've got large investor base, and I guess it happens quickly. You don't necessarily need to sit there, as Jess said, is waiting for investors to come through. We found we did 200K from going to the Right Lunch event with some, say, politicians or high net worths, or word gets around someone's office of some friends, and suddenly everyone's chipped in $5,000 each, and you can't imagine what's happened. So some amazing things happen from the phenomenon of crowdfunding with the right proposal, pitch, and offering.
Brilliant, thank you, Jess. Welcome back. We're glad to have you back. I just asked Laurence there about what attracted him to crowdfunding over other funding sources, and I guess that kind of plays into to what you were talking about why crowdfunding has become so popular. I don't know if you want to kind of carry on the point that you're making.
No, it's cool. I mean, I really like what Laurence said about just no one person having that control, and it is so key. You could have an investor, you could have a grant, you could have a corporate that's given you all the money, but next year they might not care about what you're doing, and they might go and support someone else, and then you're really stuck for that funding. Whereas when you're crowdfunding, you're really spreading your risk. If everyone's only giving you $5,000 and you suddenly have £200,000 or something, then actually if one person pulls out, it's really not that big of a deal. You can still go back to the rest and ask for a little bit more or something, and it really validates the idea as well and shows that it's needed out there.
Excellent. And Jess, you mentioned kind of in your intro that you've been involved in, I think it was 72 campaigns so far with really impressive success rate. Over your time working on crowdfunding, have you noticed that there's any particular kind of types of business or types of products that perform really well in this space?
Yeah, so for rewards crowdfunding, which is when you're typically looking for customers, you might just be starting up the business and need those customers. The best ones for that is something like really innovative that I can't just go down the street and buy. When you're looking at equity crowdfunding, like what Laurence has done, it's a business that, again, is quite unique, makes someone sit there and think, oh, that's a bit cool, which I'm sure they did when he mentioned his 4-story running track. And obviously that there's, you know, the good financials, you've got some traction, you've already got some, you know, either good clients on the books or the meetings are really set up to show that that's going to happen. Those are the ones that do well. Ones that don't do well, for rewards crowdfunding, B2B businesses don't do well. Apps don't do well for B2B, for rewards crowdfunding. You need to be doing equity crowdfunding if you were going to. Other ones that don't do well are things that make people think, oh, that sounds really cool. Wait, I could go buy that online and get it delivered tomorrow. Because obviously with crowdfunding, when it's rewards crowdfunding, you're looking at probably like 3 months to a year in terms of getting your product.
Yeah, and I guess you mentioned there about people kind of finding something really unique, and obviously we mentioned how unique Lawrence's product is with PaveGen. And do you think, I guess that this is one for probably both of you, that the world that we live in the past couple of years has changed quite dramatically, and that consumers are much more purpose-driven in what they look for? Do you think that has helped to drive it at all? That it's something that you really care about, you can really buy into, and it kind of feeds your values?
Yeah, I'd say definitely, because the founder's story is what's really important about crowdfunding. You know, why have you come up with that? Why do you care about it so much? Why are you the best person to do that? When you crowdfund, you need to be that person that is the brand that's telling, you know, the story of the campaign. Big businesses struggle so hard to crowdfund because they don't have a face. There's no one there to really take accountability, and you're not really buying into anyone in particular. Also, crowdfunding is so much about psychology. If you're a big business or, you know, faceless organization, people are usually going to assume you've got enough money, so why are you doing this? Whereas when you are like, I started this out of my bedroom, I've been doing it for this long, this is the journey I've been on, and now I want you to join me on the next steps. It's a much more engaging story to be a part of. And it doesn't need to be purpose in terms of saving the world, but I think that, the switch away from the multinationals, the switch away from the big corporates into like, do you know what, there's actually loads of amazing smaller startups out there. And then again, from a psychology perspective, like I can now boast about where I got my dress from because I've got this amazing story that I know behind it, opposed to got it at a large retail store.
Yeah, and I'd say there's many reasons why crowdfunding is suddenly ramped up. I'd say that it's really accessible now. So if you asked me 10 years ago, to go on a stock market, it was a real fiddle to get on, and validation, and to buy a part of a company. I think now the ability to go on a platform like Crowdcube takes a few minutes. You log in with your Facebook account. You don't even have to pay the money until you've actually invested. So it's accessible. Now, in terms of the ESG perspective, Crowdcube is obviously one of the UK's largest crowdfunding websites. They're one of the largest clean technology fundraisers as well. So they're showing that the young investor base they have are committed to this area. And I think, along with what Jes said around the founder story, like there's, I think I invested in a company called like Marine Orbital Power. And this video was like, you're in a Hollywood cinema, and the founder was there looking over the horizon with this deep voice narrative. And I'm like crying as I'm watching it. I'm like, this isn't about investment. Like, oh my God, save the world, take my money. So I was bought in hard on that. And when you realize that it's a small company, you kind of, it's much more believable, because, any huge corporate can throw 100K at a video and make it look cool. But actually, when you saw this was a tiny little company with lots of people really committed to a mission, it pulled those heartstrings, which then commits people to saying, I'm going to make that difference myself.
Yeah, absolutely. I think the accessibility that you mentioned there, Laurence, is a big aspect of it. I mean, probably about an hour ago, I had an email of a company that's launched a campaign, and like you said, it's literally log in, pay, go through the transaction as though it's an online purchase. And I think the lowest entry point was something like £12. So there is that greater accessibility. And you mentioned the business that you invested in, Laurence, with the Hollywood the video. I mentioned that obviously that was a big draw in your kind of attraction to that campaign. But in terms of the campaigns that you've run, what do you think has been the kind of the biggest factor in you raising so much so quickly? I know there was the campaign where, was it that you targeted 900,000 and you kind of got close to 3 million? You know, was it just simply the product that you're offering? Was it the campaign? Was it the pitch and your profile? What was it that you think kind of really boosted your campaigns?
Sure. So our background was that we went to raise 900K on our first crowdfund. We ended up overfunding, hitting 1.9 million. It was one of the fastest grossing clean technology fundraisers on Crowdcube. And then we came back a couple of years later and we went to raise 1.2. We ended up hitting our target within 24 hours. While actually we were doing a live BBC interview, we actually hit it then and there, and we overfunded to 2.4. And then we went to a slightly different platform called Wealth Club that allows high net worth investors. The minimum ticket is around £25,000 to invest, and we recently raised around 2 million with those guys. So I think the really important notes are, you can't just go on the platform and expect the platform to work for you. It's really important to have a cornerstone investor. So in our most recent fundraise on Crowdcube, we had the Hadunja Group, who are the richest two men in the UK, run it. They're a huge Indian conglomerate, and they were cornerstone investors. So when we put that up and said, look, you've got one of the largest industrial partners in the world have invested and done the due diligence, everyone came on board on that. So I think when we launched, we had been running in private and we had around, say, 700K committed of our 1.2 already. So we had all our investors behind. We even found that our previous investors came in and dropped 500,000, and we didn't expect any money from them at all, and they did. So it's amazing where people come out of the woodwork on, or that person you have your lunch with occasionally, they suddenly drop £40,000 and you have no idea that they had that kind of capital at all. So lots of interesting things happen. So reputation is really important, but I think most importantly is you need to take this really seriously. We created a mission control headquarters in our office. There was 4 people in it all the time who were running the launch. So we had to make sure that we had great video content. So we spent a lot of time curating the video. We had a forum ready. So we had lots of the answers already done. On a Saturday morning, if we had a investor question at 7:30 a.m. the team were all on the phone at 7:45 a.m. and by 8:15 we'd already drafted a response and we hit them back. So it's really important you work really rapidly and quickly, because the internet is full of lots of different individuals. Lots are lovely, but some are what I call internet haters, and you need to get those people, nip them in the bud, and then you can carry on, moving your fundraise forward. So being quick, pre-prepare questions. And then I think the most important thing around having a great campaign as well is that you need to have lots of momentum. So you need to pre-populate stories so that they're all ready to go, so that you kind of every week you've got news. And it might just be, PaveGen did an installation at Downing Street, like a demo installation, and we got Boris jumping on the PaveGen. That was a small story. It was nothing related to the crowdfund, but we put that news up, and some people loved it, and it just kept that constant heartbeat of the launch. And another piece of news we launched in City AM was we got one of the original founding team members of Apple to join our board. And that got in the media, and then we shared that, and that heartbeat just kept going and kept that cadence up that allowed us to close so quickly and then move into that overfunding space as well. So it's definitely something you need to take incredibly seriously, and you can't be successful unless you put 100% of your team's efforts into that project.
Yeah, if I can just add to Laurence there, a lot of people think a crowdfunding campaign is a crowdfunding campaign. But a crowdfunding campaign is a brand awareness campaign, a PR campaign, social media marketing campaign, email marketing campaign, fundraising campaign, sales campaign, all at one time. So you think I'm just doing a crowdfunding campaign, but you're doing all of that. No sane person would ever do all of that at the same time. When you're growing a business, you're okay, I'm going to do brand awareness campaign, then I'm going to go do PR campaign, then I might work on social media. And that takes a long time. Like Laurence has said there, every single element, video marketing campaign, had to be in that one period. So it's so much work. And then also what he said there about having that crowd, a lot of his initial crowd gave again. The first campaign's always the hardest, but the second ones and third ones, they're always going to get a bit easier in that respect, because if your investors, if your backers had a great experience in the first one, why wouldn't they give again? So actually each campaign can raise significantly more because they've had a great experience. And also because your reputation's improved over the time, your crowd has got bigger. The one most important thing of crowdfunding, in my opinion, is the crowd. And in the word crowdfunding, that comes before the funding. And it's the same with crowdfunding. Like, the reason I have a business is because platforms don't provide much assistance. So having that crowd in place before you launch to then go get the funding, you can very easily, with maths and logic, work out realistically like how much you're likely to raise.
Yeah, absolutely. And you mentioned the obviously Laurence's example, that it was very much a kind of integrated approach for the period of the campaign. Jess, do you see a lot of entrepreneurs and businesses almost hope that they can launch it and not really have to look at it again until you know, their closing date, and you know, that'll be job done, no problem?
Not as much now as I did like 5 years ago, definitely. But you know, the number of emails that I get from entrepreneurs saying, I want to raise £1 million in the next 2 weeks, but I don't have a mailing list or social media presence or following. And I'm just like, I'm not a miracle worker, mate. I can't help you. If people don't know about your business, why would they give you money? And the thing is, you've got, you know, 4 or 5 weeks to get the money. The audience has to have gone down, you know, the sales funnel, the investor funnel, the donor funnel, in order to be ready to give money on the day that you click launch. So with a crowdfunding campaign, all the hard work comes before you click launch. Just like Laurence said, preparing a list of questions you think investors will ask, and then responses. If you're in the middle of your campaign and you're only just coming up with that, you could potentially waste like 4 or 5 hours. And that 4 or 5 hours, you could have been, you know, pitching to City AM, or even being interviewed on the radio, or even having a lunch with someone that could give you 20 grand. But instead you were doing that. So, you know, when I work with my clients, everything content wise, you know, should be created before launch, except the stuff that obviously we don't know that's going to happen.
Yeah, definitely. And Laurence, looking back on your campaigns, between each one, were there any kind of learnings that you took from a campaign into the next one? Was there anything that you thought, we didn't quite do that right, we need to change it up, and kind of, you know, anything that you do differently in any future campaigns?
Well, I mean, there's no right or wrong way to do a campaign, but I think it's the kind of, there's always this like overhanging message of what we're trying to achieve. So obviously we make floors that generate energy. When you walk, it generates power. We called it hashtag the next step. And we had these like big events, it would be a hashtag the next step. And I remember when we did this, the first event, we had an investor come on board with like a massive check that was like 4 foot long, and like hand it to me on stage at like a investor event. And like there was definitely some cheesy stuff we did, but I think it's like planning the overall message needs to be like really strong. Like, why are we doing this? And saying like, what are we going to achieve? Where are we going to get to in this milestone? I think that could be done better. I think the way we shoot the videos, like I see some amazing videos now, and like we did put lots of effort in, but I think really thinking hard about the video and finding the right team that aren't just going to look at making you a video like a transaction. Like, you want them to be aligned. And I'd always say like building kickers for people. You know, if Jess was working with me, I'd be like, I want you to have 1% of everything I make over 10 million. Let's go crazy and do this. Like, align people to your mission to make sure you do it right. And then also like keep a lid on like your how big you go, because it's really easy to get carried away with these things. You can raise too much money, you can get carried away with big statements. And I think past projects that, especially on things like Kickstarter, and not everything works, you know. So I've had 2 exits on crowdfunding websites, and I have had one business went bust. So that was not great, but I don't always tell people about the one that went bust, but like, it doesn't always work. So I think, you know, don't put your eggs in one basket. And the things I wrote down was there's a juicer row, and there's the coolest cool box. I don't know if people have heard of that. And it was this cool box that raised like loads of money, millions and millions. It had speakers on it, and it had wheels. They never delivered a product, right? They failed. And this Juicero smoothie maker was this amazing smoothie, and it had the best team. And basically you had a sachet, and you put the sachet into the top of it. And someone realized that if you just got the sachet and emptied it into a glass, it tasted exactly the same. So the machine was like pointless. So and then they flopped. So I think you just need to be aware of, like, it doesn't always work for everyone. And as an investor, you need to be careful. And as a company, you need to be really careful and follow, you have a fiduciary duty to your investors as well.
Yeah. And do you think, how do I word it? You mentioned there about, raising too much, and Jess mentioned earlier about that, she's had people come and say, I want to raise $1 million in 2 weeks. How do you strike the balance between ambition and realism in your target, your crowdfunding target? Jess, I'll come to you on that.
I mean, first up, I tend to crush their dreams and then get them to build it up more realistically. So, okay, simple thing, because I'm like really bad at maths. £10,000. If you want to raise £10,000, now the average, this is rewards crowdfunding. The average crowdfunding pledge is £25. If you've got a product, use the RRP of your product, otherwise use £25. That means you need 400 people on average to therefore make your £10,000. That 400 probably needs to be about 10% of the size of your audience. However, some platforms will say it needs to be like 2% because their conversion rate's really bad. But also look at your own opening rates, look at your own social media engagement rates. If you've got a really strong community, like 80% open rates on your emails, constant likes, comments, shares, then you won't need as many people. It's going to be much easier. But if your audience is not 400 big, you won't be raising £10,000 unless you know specific people that are obviously super rich and that are going to be giving you money. Again, crowdfunding is all about psychology. No one goes into an empty restaurant. If there's 2 restaurants next to each other, both serving, let's say, Italian food, you're always going to go into the busy restaurant, even though it's going to probably take longer to get served. It's the same with the crowdfunding campaign. That first 40% is so important. So the first 40% is probably going to come from your friends, your family, the people that really know you, the people that always open the emails, always like the social media posts, have bought your products before. Once you've hit that 40%, 40 to 60, 65% is probably going to be from the rest of the mailing list, the rest of the social media following, the people who already kind of know about you, but not that much. All of those people you're conversing with. 65% and upwards are probably, they came from PR, they came from paid advertising, they came from word of mouth, and it went outwards, and they maybe don't even know about you at this point in time. But if you don't hit that 65% funded, then all of that work's not going to pay off, because those people that don't know about you look at the campaign and they're like, well, they're not doing very well. I'm just not going to give them my money, because it's an empty restaurant situation. So, in reality, the psychology of getting those people in is, one of the most important things. And it's taking a real hard and like honest and conservative look at yourself and thinking, well, like, how much of a networker am I? Or is there someone in my team that's a really good networker? Like, how good are my networks? How strong is our brand? How good is our community? And then realistically, I can probably raise that much. So let's go further and push ourselves. But
and we found, sorry, Jess, we found that in our last 24 hours, a good email would be 100K invested, and we'd be sitting there going, right, great email, guys, 100K in, and we're like, last hour, last million left, and then bang, we'd get like 90K in email. And it was amazing seeing that cadence of people, because no one cares when you're like 10% funded. It's the restaurant idea, but when you got those last minutes, it was the adrenaline was pumping. You wake up at 4 a.m. and you're like, oh my god, we've done another chunk of cash. It was incredible, that pace towards the end of a campaign.
So statistically, you raise 42% of your funding in the first 3 days and the last 3 days, because the first 3 days are all of those people that you've really prepped and they really care about it. It's new, exciting. If it's a product, they might be getting good discount. And then the last 3 days are like, oh my God, this is ending soon. I want to be the one to tip it over the jar. And the middle period is, it can be quite a suckish period, which is why you don't want it to be too long. But those 6 days are like the most important days of the campaign. There's a really good video on YouTube. It's about leadership, but just type into YouTube, dancing guy leadership. And basically this guy starts dancing in a field. And at the beginning, he's a weirdo dancing in the field on his own because no one else is dancing. Then a few people start joining in. And by the end of it, you're the weirdo because you're still sitting in the field. And it's exactly the same psychology with crowdfunding.
That sounds fantastic. I've not come across it myself, but I'm sure Chloe is currently searching away on YouTube to drop the link into the comment section. And I guess that we have a lot of experience with that kind of psychology as well with our entry window. You know, we open for a fair chunk of time, and we usually find that the first couple of weeks is when there's a big buzz because, you know, we're open for entries and everyone's excited to get theirs in. And then there's a bit of a lull, and then, you know, we close the entries tomorrow, and it's that I need to get it in. So that's certainly something we're familiar with. And Laurence, I just wanted to ask, was what Jes was describing in how to come up with your target, was that a similar approach that you took in setting your targets for your campaigns?
So Jes is talking about all sorts of crowdfunding. I'm interested in equity for crowdfunding. Total disclosure, I tried a Kickstarter and totally failed. So I don't know anything about like products crowdfunding. However, as part of a fundraise, I guess the leadership team understand what we need to achieve certain goals. And we put together a plan that is based around evaluation, and you give a percentage of your company for that valuation. And every time we do a fundraise, you've got to make sure that you spend your money and your burn goes down, but it doesn't go to zero or below zero, because that's death. And you've got to kind of get down, then pull up again. So we always say, look, if you want to raise $1 million, going for 1.2 isn't crazy. Going for 2 maybe is, if you don't need that much. And we've always had the view of raise a little often than going in with like a large 6 million raise. We could have done that early on, but I wouldn't have been the majority shareholder I am today of my business. And every entrepreneur has got a different view. If you want to raise VC capital and grow super quick and just really want to do that, you can do it in 12 months. But I felt that I really wanted to do it right and give my shareholders the best possible terms, rather than having a VC come in, shoulder them out of the way. All my early stages get shunted, so to speak, in terms of their rights. And then I would be diluted. So I think it's a management decision based on where you see the trajectory of your business going.
Excellent. And obviously we just touched on the kind of the first 3 days and the last 3 days of the campaign, Jes. So is there kind of a sweet spot in terms of length of a campaign?
Yeah, so between like 30 and 38 days. So we usually say 35. So anything less than 30, and you know, if someone's gone on a 2-week vacation back in the day, they've missed like half your campaign. So that's, you know, a waste, because it takes so much content and follow up to get the money. Anything more than 38 days, and like honest, like you and your audience are both going to be like hating crowdfunding. So between that period is the best amount of time. Most platforms also will say that statistically on their platforms, that's the best amount of time. Launching on a Tuesday or a Wednesday, best days for launching, ideally like after lunch when everyone's in a bit of a procrastination slump, and ending similar, not on a weekend. And then as well, looking at when your backers are going to feel psychologically that they've got money. You know, don't launch the week before payday if your backers are going to be buying the product, because they might be looking at their bank accounts, looking at your campaign thinking, oh, I'll buy that in a few weeks. But again, if everyone thinks that, you don't get your 40% at the beginning. So ideally kind of launching, you know, first week after payday, run it for 35 days. They've just got paid, then you launch, and then they just get paid again before you close, which is super convenient. Months of the year as well, like advising not to launch in July, August, or December or January, really, because again, people aren't on their computers as much, or they don't have as much money.
Excellent. And just before we move to the audience questions, because we've had quite a few come through, I just wanted to ask Jes, I was quite curious to understand if the pandemic has had an impact on crowdfunding, and what that is kind of what that has looked like, and what, you know, the year ahead will look like in that sense.
Yeah, sure. Pandemic's been super interesting. It's on one hand, it's opened up more months of the year. So like last year, my quiet months of July and August were not really quiet because people weren't on holiday. So you actually could continue to raise money. Super interesting. 2020, my best campaigns were for gin and gym equipment. So home gym equipment and alcohol. I mean, that really sums up for 2020, I think, for everyone at home. You know, travel gadgets used to be a super big thing on rewards crowdfunding, obviously not. So it's not a good time to launch those sorts of things. This year, you know, we're seeing that people are starting to give money again, especially in the investment space. There's a lot of money because it's been held back. So actually, people are doing better faster now. There's another side of it, though. I get a lot of emails from people, you know, my business is going down the drain. I don't think I'll survive the pandemic. I need to crowdfund. And then if I look at it, like they didn't necessarily have customers before the pandemic hit. They were already really struggling before then. I don't think the pandemic was the reason. I think the pandemic probably sped something up a little bit, but a crowdfunding campaign is not going to save those types of businesses that were already really struggling beforehand because they don't have that crowd and they maybe haven't been trading for the last year and a half. So now they've probably lost the crowd, which they did have anyway. So that's always, for me, like, I really don't want to be the bearer of that bad news to some companies, but obviously I have to. But yeah, I mean, anything for the home, anything for some kind of entertainment purposes, or, you know, that's not too much of a risk. Travel still is quite a lot of a risk for the crowdfunding space.
Excellent. Well, like I said, we've had quite a few questions from the attendees, so I'll move on to those. First up, so Jes, I know you mentioned that you work across several platforms, and Laurence spoke about Crowdcube and a couple of others. So Patricia asks, what's the best platform to go with for a startup company? And she also asks, when's the best time? But obviously you've just mentioned that, Jes. And is it best to launch before a product? Is it best to launch the campaign before a product launch, or once products have been launched? So I guess we'll go to the best platform, and maybe switch that to how do you choose the best platform?
Yeah, sure. I mean, it depends on what you're doing. So first up, decide, am I doing equity crowdfunding or rewards crowdfunding? Equity crowdfunding, you're going to go on either Seedrs or Crowdcube. You probably want to look at what other campaigns are going to be on at a similar time for you, or you obviously don't want to go on there if like the same business or something really similar is raising money the same time as you. You also want to look at what support they're willing to give you, and obviously like their audience base too. So clean tech, like Laurence said, really good over on Crowdcube, but you know, if you were launching a clean tech campaign and you're doing equity, you'd want to make sure that the investors like clean tech. If you're doing rewards crowdfunding, then you've got to think, do I just want to ship my product in the UK? You know, for example, if I'm a coffee shop in London, I don't really care about like people buying my products over in America or France. So then I'd use a British platform. Or if I've got a product such as, you know, a gardening tool, then I want to ship that all over the world. I'd use a global platform. So again, that depends on that. In the UK, Crowdfunder's probably the biggest one for UK-based campaigns for UK audiences, but you wouldn't use it for foreign audiences because they just don't know it. And then for foreign, you know, for global campaigns, if you're going global, you'd use either Kickstarter or Indiegogo. Kickstarter, more if you're going down an artsy video game, film, that kind of angle, or Indiegogo if it's way more varied and open.
Sorry, you're on mute, Laurence.
I just add, sorry, we've been through this. You know, we've met all the management team, every major global equity fundraising groups, and effectively, you know, I'd say that Crowdcube have such a large base. By far, they are like the people that it just works with. Also, when we were chatting to them, if they like your product, they'll offer you different things. They might say, hey, we'll give you a banner. We'll give you banner position the first 3 days. And we've got campaign ending here, and you're going to go after here. We'll do an email here. And if you nag them enough, they'll keep sending out emails for you. And that really helps get that momentum. I think one important thing is with some of the investment schemes the government offers, if you invest £1, you get 50p back with SEIS. Okay, so £1 to your business costs the normal person 50p only. So it's incredible. In a way, everyone should be using crowd investment platforms because of the tax benefits from it. There's also EIS that's 30% and STIS is 50. So it is a mind-blowing way to save money on your tax bills. You know, even if you earn 20k a year, it still makes sense to find those companies you like. But we were blown away by CrowdCube's offering, and I wouldn't bother looking at any others. And that's someone who's done 4 million through them on 2 campaigns, just from my experience. Cedars, you know, I think they just nearly merged with CrowdCube because they were going to take them over, but it didn't get allowed through. But I'd always say, don't even bother wasting your time. If it's UK, CrowdCube absolutely nailed it. And I'm happy to talk to people about it offline, about our experiences of the others. But we really were massive fans of CrowdCube.
Excellent. I know Chloe has popped everyone's LinkedIn profiles into the chat. So if anyone does want to follow up on anything, then they can do there. We've got time for a couple more. So Domino asks, what's the best time, or what's the best stage of business to launch a campaign? So what kind of stage in the business's life?
I mean, I think you've got to have traction ultimately. There'll be no success if it's just an idea in your bedroom. Traction is key. So if you can have a customer stand up there and say, hey, we use this glass because it really facilitated our hydration and it was amazing. Even if it's one serious customer who says that makes such difference to you saying, I'm going to make this glass and it's going to be amazing, but it doesn't exist yet. So I think key is customer traction, and 2 is revenue. If you're sitting there with, say, 80% growth and $1 million revenue, that's really exciting. That is like almost like a no-brainer if you like the area. So you can't expect to win on crowdfunding without traction. So for example, next time we launch, we actually might be waiting for that pivotal moment where we close our first $20 million contract in the States. And so we'll launch, 2 days later, bang, we'll announce the news, signed contract done. Then that's cadence and that's traction. So 100% you need to have a product of some sort, or someone saying how great your amazing glass is.
Yeah, and for equity, the traction is so important because people that are investing care about the financials. Whereas for product crowdfunding, for rewards crowdfunding, so long as you've got the prototype, so long as you've tested the prototype, you can be running that campaign to launch that product. But you've got to have prototypes, you've got to have done testing to know that your audience wants to buy in. Like Laurence said, you know, if you've just got an idea, everyone's got an idea. Think how many ideas you wake up with in the morning. It's how many of them do you actually put, you know, the blood, sweat and tears that come into actually being an entrepreneur. You know, if you've been working on it for a day versus you've been working on it for like 5 years, which one do you really think out of those entrepreneurs is not going to be giving up anytime soon? And you want to have your product at the end. So you want to go for the one that you can trust the most.
Excellent. And we've probably just got time for one more from the audience. And I think we've probably touched on this a bit already, but I think, you know, if there's anything to add or kind of expand on and recover. So Jim asks, what are the top 3 critical criteria needed to be successful with crowdfunding? And they mean in terms of, you know, business criteria in terms of revenue, profitability, projections, forecasts, existing investors, that kind of thing. So Jess, I'll come to you on that one.
I would say to have a crowd ready to fund it, to have a good brand reputation, good brand awareness, and probably 3rd is to, you know, have created some really amazing content.
Yeah, I'd say, you know, if you've got your first bit of revenue, you know, it all depends what kind of business you are. If you're a coffee shop, you know, 5k might be enough, but you know, if you're 50k of revenue, showing that starting point is really key, and having your strong mission, and then a brand, a crowd, all of that stuff really helps.
Excellent. Well, I think we're just about out of time. Before we do, you've probably covered a little bit of it there, but I just wanted to finish by asking if you wanted the audience to come away with a couple of really, really key takeaways, what would they be? So I'll ask for a couple from both of you. Laurence.
I think mine would be, one is go big or go home. You know, if you're going to do it, just go the whole hog, sacrifice everything for that launch period, and then preload the rounds as best you can with the dream team, dream investor, dream client. Everything is in that preload. Even if you spend a year preloading it, then you're ready to go and do it. And then finally, look, just don't panic. It is really stressful. I've seen founders who literally can't stop crying for an entire month because of the stress of it. And you know, you just got to be like, it's fine. You can do this. Just wipe the tear away. I know it's stressful, but you can do it.
I mean, reiterating that, I didn't realize how much of my job would be therapy. Thought I'd just be helping people crowdfund. Definitely had most of my clients crying down the phone to me at some point. My top 2 takeaways would be, don't underestimate how hard, how much time and how intense it's going to be. Really factor that in. And then my second key takeaway is like right now, if you want to do this, kind of go away and then look at your crowd, your network, and really think like, how much could I get from this person, this person, this person, this person, and come up with some kind of like basic numbers of, well, that would be like my, you know, initial funding, and that could be 5-10% of overall. So this is how much I would go and make. And then think about how much time and effort you actually want to put into it. Because like Laurence said, go big or go home, but you've got to, the amount of time and effort you put into it is equally correlated to the amount that you raise.
Excellent. Well, thank you so much, both of you, for the last, what are we, just over 45 minutes. It's been a really, really interesting session. Plenty of advice, and I can see that a couple of people have already asked if they can get in touch with you. Like I said, both your LinkedIn profiles are in the chat function, so feel free to get in touch with Laurence and Jes there. But thank you so much for your time today. It's been really, really brilliant talking to you. And with that, I will pass back to Chloe.
And thanks so much, everyone. And look, feel free, happy to always help an entrepreneur trying to figure out which platform to use or how to do it. So thanks so much, and good luck, everyone.
Thank you so much, Jes and Laurence, for sharing your expertise and knowledge with us today. It's been great to have you with us. We will be back at the same time next week with Lucy Cohen as she discusses how to get to grips with your finances. If there is anything you'd like to catch up on from today's session, we'll be sending out a replay of this recording later on today. You can find the replay and future sessions at www.lightbulb-sessions.haysummit.com. Thank you very much for joining us today. Thank you again, Jes, Laurence and Jonathan.